Before we conclude question 2, we are appealing to you to please subscribe to our channels. This is the only way you can help us. We have a whole lot for you, including mathematics, public sector accounting, management accounting, oil and gas accounting, statistics, and advanced financial accounting. A whole lot for you. Please do help us subscribe, press the like button, drop your comment, and share our lectures to your friends. By this, you will help us to produce more for you. Thank you very much, and may God bless you. As we go over to question 2. Still on question 2, which reads, interest received account was undercasted by $428. Before we pass the journal entry, let us make some analysis. The question reads that interest received account has been undercasted by $428. So the first thing we ask ourselves is this: interest received account, is it a credit account or a debit account? The simple answer is that it is a credit account. That is, it usually have credit balances or balance. Now, since the interest received account is a credit account and it has been undercasted, that means it has been reduced or understated. To correct this error, we go to the credit side of the interest received account and add $428. That means the undercast or the reduction has now been added to make the credit side complete. So when we want to correct this error, the simple logic is that the interest received account is credited with $428. Once the interest received account is credited, it means that the suspense account, which is the corresponding account, will be debited with the same figure. Therefore, when we pass the journal entry, it is just simple. Debit the suspense account with $428 and credit the interest received account with $428. This is just what you do in the journal entry. So this error can simply be corrected by debiting the suspense account and crediting the interest received account with $428. But the simple truth is this: why are we actually debiting and why are we actually crediting? Remember that I told you that any transaction or any error that reduces a particular side of an account increases the other side. How? Assuming we have a debit account that has $100 and we have another credit account that is supposed to bear the corresponding $100. And now the credit account was undercasted with $20. What it means is that the credit account bears $80 while the debit account bears $100. Both accounts are supposed to bear $100 each, debit and credit, because the double entry principle states that for every debit entry there must be a corresponding credit entry. Since the credit side has been undercasted by $20, it has resulted in the debit side of the account being what? Increased by what? 20. 100 minus 80 is 20. And this is our point of focus. Did the interest received account increase any part of the trial balance? The answer is yes. Once any part of an account is reduced, as we have been given, that the interest received account has been undercasted or reduced by $428 due to error. What it means is that the corresponding debit entry of such account has increased because it remains at the normal entry while the other account, the credit account, has been reduced. So to pass the journal entry, we credit or add to the interest received account $428 and debit the suspense account, and this ends our transaction. So you can see we rightfully credit the interest received account with $428 and the suspense account will be debited with $428. What it means is that this error has succeeded in increasing the debit side of the suspense account or the debit side of the trial balance by $428. Because once the credit side of an account is reduced or undercasted, what it means is that the debit side of the trial balance has been increased by such amount. Let's make a little analysis using account B and account S for a better understanding. Watch. Assuming we debited account B with $100 and a corresponding account S is credited with $80. Of course, when account B is debited with $100, the corresponding account S is supposed to be credited with $100. But by error, account S has been credited with $80. What it means is that account S has been undercasted by $20. That is $100 minus $80. Since the double entry principle states that for every debit entry of $100, there must be a corresponding credit entry of $100. Now, what effect will this error have in the trial balance? It will succeed in increasing the debit side of the trial balance by 20. That is $100 minus $80. Because in the trial balance, the debit of account B will bear $100 in the trial balance, while the credit of account S will bear $80 instead of $100, thereby reducing the credit side of the trial balance by $20. Because this will be credited in the trial balance and this will be debited in the trial balance. Since the trial balance is used to test or check whether anytime we are debiting an account, the same amount was credited in the corresponding account, and vice versa. This could also happen when a debit side of an account is undercasted. The effect is that it has increased the credit side of the trial balance. So that is exactly what we are saying here. Now that is why we said that since the interest received account has been undercasted by 428, we added back the 428 on the credit side when correcting this error. Therefore, the interest received account has been credited with 428, while the suspense account will be debited with 428. Immediately we debit the suspense account with 428, what it means is that this error has succeeded in increasing the debit side of the suspense account, or has succeeded in increasing the debit side of the trial balance by $428. Since this error resulted in an increase on the debit side of the suspense account and also resulted in decrease in the credit side of the suspense account. We now go to the suspense account and debit 428, and at the same time we make our journal entries by debiting the suspense account with $428 and crediting the interest received account with $428. This is what you are supposed to know. We may just come in an exam or in a class and just credit the interest received account with $428 and debit the suspense account with $428. And when we are journalizing, we debit the suspense account and credit the interest received account, and that ends it. But what we are trying to do as this foundation stage is to really make you to understand the logic behind the errors and suspense account, to be able to understand everything on what transpires or what happens during the preparation of errors and suspense. Now let's go to the journal and make our journal entries and narration. So before we go to the journal to pass our journal entry, of course, you know that the interest received account will be debited to the suspense account 428. We have just used these two accounts as workings so that you understand what we are really doing. In the examination, the interest received account and this other suspense account needs not to be opened. In the journal, we debit the suspense account with $428 and credit the interest received account with $428. Now, our narration will be being undercast in interest received account now corrected, or we can say being undercast arising from interest received account now corrected.